Stockman Nigeria. That's one pretty big company on the market.
Indeed, it is a big company. Since the introduction of the high and heel window, we have seen increase in sentiments for Zenith Bank as well, similar to the other banks, listed on the bourse. For Zenith Bank, it has consistently delivered very superior returns, even in FY 2016 and FY 2015, when the Nigerian economy faced lots of economic challenges. They still delivered very good, financial performance. Their level of ROE is now very close to 20%, and if you look at their valuation multiples on a price-to-book basis, it is now very much above 1.0 times price-to-book, which shows that investors are trying to ensure that they close the valuation gap between the stock and the leader of the pack, which is GT Bank. I still see, possibly, very small upside to the stock. But on their Eurobond, it seems as if the Eurobond is now, almost fairly priced. They have an instrument maturing very soon, and if you look at the yield to maturity,
so that's the one for 2019.
Correct.
6.25%.
6.25%.
Yeah, 2019. That's another senior unsecured.
Right.
Half $1 billion that was raised in 2014 is now maturing next year, and that will have, and that still got a buy recommendation even at this point.
And if you look at the yield to maturity of the bond, the one that's to mature in 2019, you will find out that it is trading at a premium to its par value, the bond itself, which shows the kind of positive sentiments the bond enjoys. In fact, the yield to maturity is even lower than that of the sovereign, which is Nigeria, so that shows the kind of trust and the premium that investors are attributing to Zenith Bank.
Let's bring in First Bank into the entire conversation, and this report also I have a few things to say about First Bank, and say the FBN Holdings bonds may well continue to tighten, that is the yield. This research folks at Exotic Capital says, quote, "We think progress on asset quality will be a key factor for performance of these bonds." At least the two bonds that First Bank has in the market, one is maturing in the year 2020, 8.25%. Another one is maturing year 2021, 8%. Both bonds now have a hold recommendation, as previous as old recommendation from Exotic Capital folks in London. And the yield is about 10.35 and 10.79. This double digit, so this report points out that this bank will have to work on its non-performing loan ratio and perhaps claw back some of these big multi-million-dollar loans so as to improve its asset quality.
Yeah, you're right. We also hold a similar view. Unlike most of the other Tier 1 banks, FBNH has been troubled over the past 2 years, essentially due to their weak asset quality. They've been delivering very solid net interest income, but by the time they deduct their impairment charges, they've hardly been able to record any interesting performance. For full year 2016, they managed to deliver a very small level of profits after tax, but for 2017 so far, there has been an improvement in sentiment on the stock, mostly due to management guidance, or rather their efforts to try and improve on their asset quality. They have restructured a number of loans. They have also tried to reduce the appetite for the bank, for growing risk assets, and trying to claw back some of the non-performing loans as well. So hopefully, with the improvement in asset quality going forward, there will be a turnaround in the financial performance for the bank. And if you look at the Eurobond that they have outstanding, it has enjoyed very positive sentiments. A year ago, FVNH Eurobond was trading at over 15% year to date, but right now it is now around 12%. Yield to maturity rather, but right now it's now around between 11 to 12% yield to maturity, with even further scope for gains if they're able to deliver on the guidance to improve asset quality.
2 minutes to wrap this up. Are you surprised that none of these, about 10 Nigerian bank bonds, Eurobonds, trading globally at the moment, none of them has a sell recommendation, but a buy and hold?
I'm not surprised. I'm not surprised. The reason being that macro fundamentals, they are improving. Company fundamentals are solid, And if you look at the valuation of most of these Eurobonds, they are still, very close to, to their par value. So for global investors who are looking for yields all over the world, running away from the low interest rates at home, they are very good bonds for them to buy.
And you think this provides a basis for perhaps other banks to issue new Eurobonds or roll over what they hold, refinance them as the market singles, and move on into even longer tenured instruments? Yeah,
probably. We have seen the primary market for Eurobond issuance for Nigerian banks has been calm, for a couple of years now. But since December last year, we have seen banks going back to the market to raise capital. Access Bank opened the floodgates. They raised about $300 million, via a 7-year bond. Although they went so early, so they were priced at a very ridiculous yield to maturity. But we have seen other banks coming to the market. Zenith Bank has followed up. UBA has gone to the market. Possibly by next year, we may see other banks like Fidelity and FBN coming to the market to refinance their maturing Eurobonds.
Omotola Abimbola, thank you very much for putting these bonds in perspective, and this a bit of some good news in the midst of others. Thank you very much. Omotola Abimbola, one of the investment research analysts at Afrinvest. Afrinvest is one of the investment and securities companies in Nigeria registered by the SEC.